A very good evening to all my dear students. How are you all? So today we are meeting for the last session for chapter number 7, which is completion and review. And I hope that uh, in the last class, I have asked you to go through, to come after reading the module. So I hope that you all have done that. I hope that you have started preparing your auditing and ethics subject for your exams. So kindly tell me. Let others also join. Meanwhile, please tell me, have you all actually started preparing for your exams and more specific, like in specific, this subject, auditing and ethics? Khushi, Gayatri, Nidhi, I can see these students have joined. Others also, please reply. So there is Nisha, Nidhi, Khushi, Gayatri. So Nidhi is saying yes, ma'am. So have you all read the chapter? We were left with discussion of the question answers and one very important essay, that is essay 265. In this chapter, students, we have already covered essay 560, 570, 580, 450 and essay 260. And before starting this chapter, I told you that this is a very important chapter. Any practical question from any of the 6 essays can come, and the saransh that is given whereby the essays that are given in this chapter and other chapters also, where everything is summarized. The saransh gives a bird's eye view to the essay if you talk about this particular chapter. So in the last class, we have seen the saransh relating to few essays. Today also, I'll just take you through the saransh for your better understanding, and in order to make you understand, that's the resources that are provided to you on the POS knowledge portal are really very, very useful for you. So please tell me whether you have actually started preparing this chapter. Vedant has recently joined. Tell me quickly. I need reply so that on a positive note, we can proceed with this chapter and we can finish up this chapter. Nidhi, Nisha, Vedant, Khushi, Gayatri, please reply. So I can see a number of yes, which is really very good. So let us start with the topic that is scheduled for today, which is SC 265, right? So this is given on page number 7.45 of your module. Essay 265. Page number 7.46. Communicating deficiencies in internal control to those charged with governance and management, right? Tell me, is expressing an opinion on the financial statements required by the statutory auditor? Expressing an opinion on the truthness and fairness of the financial statement, is such kind of opinion given by the auditor? Quickly tell me yes or no. Quickly tell me. Yes. One reply has come. Others also please reply. So yes, the auditor is required to express his opinion as to whether the financial statements are prepared in all material respect as per the applicable FRF. He is required to express an opinion whether the financial statement give a true and fair view in all material respects, right? Now my second question. So now when you will be giving me the answer, just write second and your answer. Is the auditor required to give his opinion on the internal controls that are, that are designed, implemented, and maintained by the management? Tell me, write second and your answer, two and your answer. So why I'm getting mixed answers here? Someone is saying yes, someone is saying no. Others also please reply. My question is the auditor required to give his opinion on the internal control, also internal control, which is designed, implemented, maintained by the management of the company? So the answer is no, right? Auditor is not required to give his opinion on the internal control, right? But whatever you have studied so far, have you seen a topic like test of controls? Test of controls? Yes or no? So yes, you have studied a topic whereby the auditor performs audit procedures in order to see the operating effectiveness of the internal control that is designed, implemented, and maintained by the management. So now, why is the auditor checking the internal control? Because he wants to decide his extent, his nature, timing, extent of the substantive procedures that he has to perform. He want to assess the risk of material misstatement, right? And students, as such, the auditor is not required to give his opinion on the internal control that is designed, implemented, and maintained by the management of the company, right? But let's say the auditor is, performing the test of control, which is what testing the internal controls of the company. And he finds, or otherwise also, when he was conducting the audit, when he's performing the substantive procedures, let's say during the course of audit, anytime he comes across any, deficiency in the internal control, what is the responsibility of the auditor in that case? This is what is dealt in SA 265. So auditor as such is not required to give his opinion on the internal control. But yes, we have seen that auditor he checks the internal control that is designed, implemented, and maintained by the management of the company. So if he comes across any deficiencies in internal control, he needs to communicate them to those charged with governance and management. And so is the name of this essay, which is what? The number is essay 265, and the name is Communicating Deficiencies in Internal Control to those charged with governance and management. Is it clear to everyone as to what is contained in essay 265? So the first line says that SA 265 deals with the auditor's responsibility to communicate appropriately to those charged with governance and management what the deficiencies that are identified in the internal control during the course of audit. Is it clear? Is it clear? Right? So again, students, if you remember in essay 315, that is what? Identifying and assessing the risk of material misstatement through understanding the entity and its environment, including internal control. So that identification and understanding of risk of material misstatement, which is a function of inherent risk and control risk. And control is when he's performing the responsibilities that are given to him as per SA 315, he's actually understanding the internal control. He's actually trying to assess the risk of material misstatement, which is nothing but a function of inherent risk and control risk. And control risk is related to internal control. What is control risk? That the internal control is not able to prevent or detect and control material misstatement on a timely basis, right? That is basically, in a simple language, the internal control is not working effectively. That is what is, contained in control risk. So auditor is, as it is, obtaining an understanding of the internal control under SA 315. But the purpose here is not to express an opinion on the internal control of the company, but in order to understand his own, nature, timing, extent of substantive procedure, in order to decide his own, program, how the audit is going to go forward, the auditor obtains an understanding of the internal control. If he finds that the internal control are operating effectively, he may intend to rely on the internal control, and thereby he may reduce the extent of checking of his or the substantive of his extent substantive testing, right? So the purpose here is not to as such express an opinion on the internal control, right? Is it clear? Right. So what is the purpose or what is the objective of the auditor in terms of SA 265? It is basically to communicate appropriately to those charged with governance and management deficiencies in internal control identified during audit, which are in auditor's professional judgment of sufficient importance to merit their respective attention. So basically, where the auditor, as per his professional judgment, he finds that a particular deficiency in internal control that needs the attention of the management or those charged with governance, he needs to communicate them appropriately on timely basis. So let's take a very simple example, that let's say the company has implemented an internal control in the form of CCTV cameras, right? At the factory gate. So whatever, whatever material is taken in, it is captured in the CCTV cameras. Whenever the material go out, the same is captured in the CCTV cameras. Now there are, let's say, 5 factories of the client. Now, during the course of audit, auditor finds that out of 5 factories, 3 factories are in an area where there is a major problem of power cuts. Now, though the internal control has been implemented, designed and implemented by the management, but it is not operating effectively. Let's say there is no power backup. And according to the auditor, this is a very significant deficiency in the internal control, because the inventory that is kept in those factories, let's say, is very high value item. And most of the time, the CCTV cameras are not working. There is no power backup. So auditor will, if in his professional judgment such matter needs to be, such deficiency in an internal control needs to be communicated to those charged with governance or management, he'll do that. Let's take another example. So let's say the company has implemented an internal control that whenever the traveling bills of any employee are to be passed, then if the amount exceeds 10,000, that traveling bill needs to be authorized by 2 personals, 2 authorized signatories, right? Now, when he was checking the internal control, when he was performing the test of controls, he found that on various occasions, let's say, whenever the traveling bills of any senior official come, no approval is taken. There is no signature of the authorized signatory, not even one. I can see a number of yes. Okay. Now, when we say there is deficiency, no control. The CCTV cameras are not installed. There is no control, right? Or there is control, but the control is not able to prevent or detect and correct that misstatement on a timely basis. So let me just, control is not existing. Anyone can come, steal the inventory and go. The control is not existing. So it is what deficiency in internal control. So let's say in a particular area, the CCTV camera is not been installed. So control is not existing at all. Okay? Or detect and correct. So first of all, they should be able to prevent. P here stands for, so I call it PDC on a timely basis. So P here stands for prevent. Either it should be able to prevent or detect and correct. So either prevent the person who has come to steal the inventory, let's say, if he sees the CCTV camera, he should not enter the factory. So it should prevent. Or let's say that person has entered the factory. So the CCTV camera should detect and correct. So the CCTV camera should capture the person who has come to steal, and it should help in taking the corrective action. So as simple as that, right? So two things are there. Deficiency in internal control will be there when the internal control is not existing at that particular time. So I gave you example of CCTV camera not being installed. Though the internal control is there, that CCTV camera should be there on each and every factory gate of the company, but it is not there. Secondly, it is there, but it is not in a working position, or let's say the power backups are not there. So it is not able to prevent or detect and control the misstatement on a timely basis. So this is what is meant, what is deficiency, right? But the way we are responsible for what? The way we are concerned with, concept of what? Significant deficiency. Deficiency, what is it? Is it clear to everyone? Deficiency in internal control, either the internal control is not existing, or if it is existing, it is not able to control or prevent, it is not able to prevent or detect and control the material misstatement on a timely basis. Let me just take you through the module for this deficiency, for this definition. So see, deficiency of internal control, and we are on page number 9.46 of your module. See, a deficiency exists when a control is designed, implemented, or operated in such a way that it is unable to prevent or, so this is connected by or, detect and correct misstatement in the financial statement on a timely basis, or a control necessary to PDC, prevent or detect and correct misstatement in the financial statement on a timely basis, is missing. So if I ask you about the definition of this term deficiency, will you be able to answer? Deficiency in internal control. So either the internal control which is required to, prevent or detect and correct misstatement in the financial statement on a timely basis, either that is missing. Or if it is there, then it is unable to prevent or detect and correct misstatement in the financial statement on a timely basis. Is it clear, everyone? Okay. And now what is meant by the term significant deficiency? So first of all, I'll show it to you from my notes. Significant deficiency in internal control. So any deficiency becomes significant, important, when the deficiency or the combination of various deficiencies in the internal control, in the auditor's professional judgment, are sufficient importance, they are of such importance that they merit the attention of those charged with governance. So according to the auditor's professional judgment, such a deficiency or a combination of such deficiencies should be communicated to the those charged with governance, right? So significance will depend upon what? Misstatement actually occurred. So whether misstatement has actually occurred, so let's say the internal control is there, CCTV cameras are not working, and there has been instances of 2 or 3 instances whereby the raw material, the inventory has been stolen, and no proofs, no corrective action has been taken. So whether misstatement has actually occurred. So let's say if I take the example of traveling bill expense, so the internal control says that it needs to be approved by 2 authorized signatory. Instances are there that on occasions where the traveling bills of seniors are to be approved, they are to be paid, no signature of the authorized signatory is there, they are passed by the employee himself, whoever is submitted the bill. And instances have come whereby over reimbursement has been taken. So misstatement actually occurred. Likelihood that the misstatement could occur, chances are the probability that this misstatement could be repeated, and the potential magnitude of misstatement. So let's say the things that have been stolen are worth rupees 10 lakhs. Magnitude. The over reimbursement that the employee has claimed is, let's say, double the amount of the actual expense. right? Significant deficiency may exist even though auditor has not identified misstatement during audit. See, whenever the auditor checks the internal control, he's not doing 100% checking of the internal control. Internal control, test of controls are always done on sample basis. So chances are there that the test of control he's performing, that sample transactions that he's considering for internal control testing, there is no problem, and the balance that he has left, there are significant deficiencies. Okay, let us just have a look at the definition of this meaning. Sufficient significant deficiencies from your module. And once we are done with this, then I'll tell you why I am, devoting some time. I'm taking you through the module also for this deficiency, for this definition. So significant deficiency in internal control. A deficiency or a combination of deficiencies in internal control that in the auditor's professional judgment is sufficient importance to merit the significance depends not only on whether a misstatement has actually occurred, but also on the likelihood that it could occur and the potential magnitude. Right? Are you able to understand? So now, when the auditor needs to consider as to whether a particular deficiency in the internal control is significant or not, whether a combination of the deficiencies is significant or not, he will consider various factors like what? The likelihood of deficiencies leading to material misstatement. If he feels that in future such material misstatements can reoccur, obviously these are significant. The susceptibility to loss or fraud of related asset or liability. Susceptibility is what? There are chances that there can be fraud related to that particular asset or liability. Again, significant deficiency. The subjectivity complexity of determining the estimated amounts. Let's say provisions are calculated and auditor feels that the internal control that are implemented, that is not been followed. The amount of provisions are meant to, let's say, manipulate the figures of P&L. Again, significant deficiency. The financial statement amounts exposed to deficiencies, where the impact of such deficiency can be. The volume of activity that has occurred or could occur. The importance of control to the financial reporting process. See, let's say any deficiency in internal control relating to attendance marking is there. Now, auditor will consider whether it has an impact on the financial aspect of attendance market, like salary calculation, TDS calculation. So what is the importance of the control which is having any deficiency, and importance of control to what? The financial reporting process. So let's say there is an internal, deficiencies in the internal control relating to the attendance marking. The biometric devices are not working properly, and it has a direct impact on the salary calculations. So auditor may, as per his professional judgment, determine that yes, the controls are the deficiencies in the control are important for the financial reporting process. They have an impact on the financial reporting process. Right? Let's say an internal control is there. Let's say the company is using one of the accounting softwares, SAP, right? Whereby the accountant has a permission to, post the entries, to make the payments using some username and password. Now, let's say when the accountant is required to put the username and password, this is what? This is nothing but a general, control, internal control that is implemented on the accounting system. Now, let's say that is not working properly, it is going to have an impact on the entire way the financial statements will be processed, will be, the bookkeeping will be done, the recording will be done, the financial reporting process will be done. So whether, according to auditor's professional judgment, that particular control is important for the financial reporting process. So general monitoring controls. Controls over preparation, prevention and detection of the fraud. So let's say any control is there which will help in prevention detection of fraud that is not working properly. Any monitoring control is not working properly. Controls over the selection and application of accounting significant policies. See, these are going to have a direct impact on the financial reporting process. Controls over significant transactions with related parties. The transactions with related parties are not being authorized by are not being signed, approved by the authorized signatories. Anyone and everyone can pass the transactions with related party at any price, whatever they want. So the internal control is not working properly. Controls over significant transaction outside the entity's normal course of business. So any of the transactions, let's say there is one major scrap sale during the year, and the amount of scrap is, let's say, 5 crore. It is a huge figure as compared to the, if you compare it with the financial statement figures, right? So any control over such transaction, controls over the period and financial reporting process, controls over non-recurring general entries. Certain general entries, let's say sales are booked and in the next month the sales return are booked. So let's say the internal control relating to sales are not working properly, right? On it says non-recurring general entries. See, generally what happens is internal control with respect to recurring entries like sales, purchases that are implemented. But let's say there is one transaction, for example, scrap sale. It is not a transaction of recurring nature, and chances are there that internal control are not even implemented or they are not operating effectively with respect to such transaction, right? The cause and frequency of the exception detected as a result of deficiencies. If there is a deficiency, what is the cause? What is the frequency? So if you remember, I gave you example that the CCTV cameras are not working. Let's say it happened once in 6 months, but let's say it is happening thrice a week. So the frequency and the interaction of deficiencies with other deficiency in the internal control. So let's say the CCTV camera is not working. Apart from this, the guard is also on leave. So the interaction of deficiency in one internal control with the interaction in other. Are you able to understand this point? One internal control was what? CCTV camera. The other internal control was what? The guard is sitting. Let's say third internal control is what? The entries are done in the register. No register is kept. No, none of the person is making any entry in the register. Also, CCTV cameras are not working. So interaction of deficiencies with other deficiencies in internal control. Is it clear? Is it clear, everyone? Okay. Now, I would like to just show you as to why this topic I discussed in detail from your, just a minute, from your module also. Just give me a second. Let me just share the screen. Hmm. Just have a look at this question paper. This is September 25 question paper, and look at this question. Question number 2, A part, and it is a 5-mark question. September 25 paper. Just have a look at this. What do you mean by deficiency in internal control and significant deficiency in internal control. Such a straightforward 5-mark question. See how you are supposed to write the answer. Essay 265, communicating deficiencies in internal control to those charged with governance and management, defines deficiency in internal control and significant deficiencies in internal control. So first of all, you have mentioned that where is this definition given? So you have told the, paper checker that, see, I know the essay number, the essay name where these concepts are dealt in. So deficiency in internal control exists when the entire explanation, and this is about significant deficiency. Just have a look at the answer. I'll just bring it to one page. Are you all able to understand why each and every topic, each and every concept, each and every line that is given in your module is really very, very important if you want to pass your exam with flying colors? Such a straightforward question. So now just have a look at this. Meanwhile, I'll just see your queries. So there are no queries. You have just given replies to whatever I have asked. So is this clear? Is this definition clear to everyone? Okay. So what we have discussed so far is a deficiency in internal control, significant deficiency, and what can be various, examples of matters that the auditor may consider in determining whether a particular deficiency or a combination of deficiency in internal control constitutes a significant deficiency. So basically, like, what is the amount, what is the volume of transaction it is having, effect on the items in the financial statement that will be exposed to that effect of the deficiency. So basically, whether a deficiency is important, is significant or not, or whether a combination of deficiency is significant or not, auditor is going to consider that, right? Now, in your module on page number 7.48, certain examples of indicators of significant deficiencies are given. So here the topic that we have covered, examples of matters that the auditor may consider in determining whether a deficiency or a combination of deficiency in internal control constitutes a significant deficiency. So what all the auditor will consider while deciding whether a deficiency is significant or not. So we'll see the likelihood of deficiency, the volume of activity, the financial statement that are exposed to deficiencies. So these are factors or matters he's going to consider, right? Now, certain indicators are given that if this happens, this is a significant deficiency. If this is happening, this is a significant deficiency. So now we are going to understand this concept. Tell me, are you all able to differentiate this topic that is given on page number 7.48 with the topic that is given on page number 7.47? 7.47, example of matters that the auditor may consider in determining whether a deficiency or combination is significant or not. So whether a particular thing is significant or not, let's say he finds a deficiency. He'll see, okay, on what all financial statement items will it have an impact? Is it related to loss or fraud? What is the impact? What is the volume of activity that is going to be impacted by this? Okay? So basically, he's analyzing the impact of that deficiency or combination of deficiency. And here essay 265 says that if this happens, this is significant deficiency. No need of, analyzing it. If this happens, this is a significant deficiency. So are you able to differentiate between the two topics first? First of all, tell me. Yes, Anil, you are right. Others also please reply. Gayatri is also saying yes. Others also please reply. So now what we are seeing. So here, now what we are trying to understand is that if this thing is happening, it means it is an indicator of significant deficiency. Okay. So evidence of ineffective aspects of control environment, dear students. When you were, when you were taught about internal control, you must have learned about the various elements of internal control, and you must have studied about control environment. And there was a topic that deficiency in control environment is not a deterrent to ineffective internal control. A topic like that was there. So if there is ineffective control environment, chances are there what? That this is a significant deficiency in internal control. For example, so I'll just take you through my notes for this. So, for example, there is an evidence that the control environment is ineffective. How? For example, there are significant transactions in which the management is interested. These are not appropriately scrutinized by those charged with governance. So let's say one transaction is there with a related party. Okay? And let's say Mr. A is the general manager and Mrs. A is the related party. Mrs. A is into the business of selling furniture, and the same has been purchased by the company in which Mr. A is there, right? Or let's say he's the director and then Mrs. A is a related party, and from her company the transactions are been done, and such transactions are not been, let's say, scrutinized by the audit committee. These are not been scrutinized by, let's say, the board of directors. So the transactions in which the management is financially interested. So this in itself is a indicator that yes, the internal controls are having significant deficiencies because the control environment is very ineffective. Okay? There is an identification that management fraud was not prevented by the internal control. Auditor could find that there was a fraud which was conducted by the management, which was committed by the management, and the same was not detected, prevented by the internal control. Management's failure to implement the appropriate remedial action, significant deficiencies were previously communicated. Let's say last time when the auditor conducted the audit last year, there were certain significant deficiencies. Those were communicated to management, those charged with governance. But the remedial action has never been taken. Again, ineffectiveness of the control environment. Okay? So these are the indicators of significant deficiencies in internal control. Transactions in which management is interested, financially interested, never been scrutinized by those charged with governance. Management fraud is there, but the same was not prevented by internal control. Significant deficiencies which were communicated earlier. No remedial action taken so far. Okay? And other examples of indicators of significant deficiencies is absence of risk assessment procedure. So, see, auditor identifies and assesses the risk of material misstatement. But before him, it is the responsibility of the management also to identify that what all kind of risk are associated with the entity, with the entity itself. Let's say there is no risk assessment procedure that has been followed by the company, by the entity. Okay? Or even if the risk assessment procedure is there, it is ineffective. It is what? Ineffective. So are you all able to understand this topic, what we are studying right now? We are studying that. And just a minute, let me just tell you the page number in your module where this topic is given. It is given on page number 7.48. And we are studying that these are the indicators which simply mean that, yes, it is a significant deficiency. For example, ineffective aspects of control environment. Then the entity is not having any of the procedures to identify its risk associated with its various processes. And even if it is there, it is really very ineffective. It is just for namesake. It is not working properly. Okay? And if any identified significant risk were there, the responses that has been received is ineffective. Okay? Are you able to understand? Then let's say the auditor identifies any misstatement, but the internal control was not able to prevent or detect and correct that misstatement. What does that mean? Auditor, he himself identified that misstatement, but the internal control could not detect that, right? So that means again, the significant deficiencies in the material misstatement, right? Let's say any misstatement was there due to fraud and error in the financial statement, and the same has been shown as a prior period item in the current year P&L. So intentions are there to what? To hide the reason behind that particular item, which is shown as a prior period item, though it is due to misstatement, whether due to fraud and error. Again, indication of significant deficiencies. Okay. And last but not the least, if there is an evidence that management is is not able to oversee the preparation of financial reporting process, there is no one who is responsible for oversight of the financial reporting process, again a significant deficiency. So here this topic says that these are the matters that the auditor will consider in determining whether a particular deficiency or combination is significant or not. And these are the examples which says that these are the indicators of significant deficiencies in internal control. So internal control, whether it is effective or not, it depends upon control environment in which it is, in which the internal control will be working. So the ineffective aspects of control environment, if these are there, it means indicator of significant deficiencies. Okay. Same way, whether the company is having any risk assessment procedure. So if it is absent, so absence, or if it is there but it is ineffective. So these 2 points are related. Too ineffective, now you can link the fourth point, which is what? Ineffective response to the identified significant risk. Misstatement detected by auditor's procedure but was not able to PDC by the internal control. Any misstatement been shown as prior period item, and evidence that management is unable to oversee the preparation of financial reporting process. These are the indicators that yes, significant deficiencies is there. Okay. So abhi tak what we have done in essay 265, first of all, the name is what? Communicating deficiencies in internal control to those charged with governance and management. Who are those charged with governance? Who are management? We have done this in detail when we were doing SC 260. So I'm not repeating that. In case you have any query, you can ask me. But in the last class, we have discussed this in quite detail. Okay. Okay. Anil, I'll answer to your query. Just let me revise whatever we have done. So it says that SA 315, the name of which is identifying and assessing the risk of material misstatement through understanding the entity and its environment. SA 315 says that the auditor understands the internal control also. But the purpose is not for expressing an opinion on the effectiveness of internal control, but to understand internal control in order to assess what the risk of material misstatement, right? So the auditor can identify any deficiencies in the internal control, maybe during the risk assessment procedure or while performing any other procedure at any stage of audit. So the objective of the auditor in terms of SC 265 is to communicate appropriately to those charged with governance or management, deficiencies in internal control identified during audit. If in the auditor's professional judgment, these are of sufficient importance to merit their respective attention. And deficiency and significant deficiency, we have understood that deficiency exists when the control is unable to prevent or detect and control misstatement on timely basis, or when the control that is required to prevent or detect and control material misstatement is missing. And it is deficiency or the combination of these deficiency is of sufficient importance to merit the attention of those charged with governance. That is, according to his professional judgment, this deficiency need to be communicated to those charged with governance. And it will depend upon whether misstatement has actually occurred, whether the misstatement can occur, that is likelihood of misstatement, and the potential magnitude. Is it clear? The example of matters and the example of indicators. Is it clear till here? So Anil has asked a query that, ma'am, what if the internal auditor fails to identify specific deficiency and statutory auditor unknowingly followed it? See, students, there is one essay 615 using essay 610 is there. Then apart from this, there is essay related to using the work of internal auditor. That is essay 610 only, right? Students, there that essay specifically says that auditor can, rely on the work of internal auditor, or he may use the internal auditor as a direct assistance, but ultimately the opinion is the sole responsibility of the statutory auditor, external auditor. He cannot say that I relied on his work and his work was not correct. The person who is signing the report, he has the sole responsibility of the entire opinion. Though he may use the work, but SA 610 gives a responsibility that if you are using the work of the internal auditor, or you are using the work of the internal auditor as audit evidence, or whether you are using the direct assistance of the internal auditor, some factors are there, like you will see the competence, the objectivity, the competence of the internal auditor, whether that work is appropriate for your purpose or not. So there are certain things that the auditor needs to consider, but ultimately it is the sole responsibility of the auditor to give his opinion on the financial statement. Is it clear, Anil? Yes, Anil, you are correct. Okay, is it clear? So now you have understood what is meant by deficiency, what is meant by significant deficiency, what are the example of, matters that he'll consider while seeing as to whether a particular deficiency is significant or not, and what are the indicators that means that significant deficiency is there. Now SS 265 is what? Communicating deficiencies in internal control to those charged with governance and management. So now the next topic that we are going to do is communication of such significant deficiencies. So first of all, should it be oral? These are significant deficiencies. You are communicating them to those charged with governance. These should be in writing on timely basis. And if you are approaching the those charged with governance, they should also be communicated to management at appropriate level on timely basis in writing. Okay? And auditor will tell the management that he has communicated or he intends to communicate to those charged with governance unless he finds it to be inappropriate. So what is this thing telling you? That first of all, when the auditor is communicating the significant deficiencies to those charged with governance, it should be in writing and it should be on timely basis, right? And in fact, before, communicating, he may communicate it to the management at appropriate level that either we have communicated or we intend to communicate it to those charged with governance. Unless, let's say let's say it has something to do with the fraud which management has committed. So obviously he's not going to tell the management that, see, I'm going to, communicate it to those charged with governance. If, let's say, the intensity of that fraud is very high, all the management is involved. So he will directly go to those charged with governance. But otherwise, if he finds it appropriate, he may communicate to management also that this is the thing we are going to discuss with those charged with governance, or this is the thing that we have discussed with those charged with governance. Okay? And also, if there are, other deficiencies in internal control, which are not communicated to the management by other parties, that again, in the auditor's professional judgment, is of sufficient importance, which merits the management attention. He is going to communicate that to those charged with governance. So for example, the internal auditor has not communicated it to the management, but statutory auditor feels that this is so important that it should be communicated to those charged with governance. He will communicate that. Okay? Are you able to understand the topic communication? So it should be in writing on timely basis, along with those charged with governance, to management in on like at appropriate level. And if certain deficiencies, which according to auditor should have been communicated by other parties, so other parties can be what, your internal control department, your legal department, let's say, of the company, but they have not done that, he'll communicate that, right? And when he's communicating to those charged with governance, he will give a description of the deficiency. What is the deficiency? Okay? That the traveling bills are not signed in case of the senior officials. They are being passed, they are being paid without being approved by the senior officials, but the internal control says that the same need to be approved by two authorized signatories. What is the explanation of the potential effect, the potential impact, what can it be? Auditor should give an explanation of that. Okay? And he should basically he should give sufficient information so as to enable those charged with governance or management to understand the context of the communication. He should give basically the information as to why is he giving this information, in what context he is giving this information. So let's say I am the auditor, I am giving this information to those charged with governance that so and so deficiency is there. Okay? I'll give a description. I'll give my explanation for the potential effect, why I feel so. Okay? And I'll give all briefs, everything related to that, so that they are able to understand the context. Also, I'm going to tell them that, see, the purpose of the financial statement audit is to express an opinion on the financial statement. And here I'm not doing this for the purpose of expressing an opinion on the effectiveness of internal control. So I am making it really very, very clear that, see, those charged with governance, see, management, I am not giving any opinion on the internal control. So it should not happen now that, let's say, I have communicated one deficiency, I have communicated one deficiency to those charged with governance. And let's say if they do not have the context in which I'm speaking, or they do not understand as to why I'm telling them, they may, presume that apart from this, all internal controls are working effectively. But this is not the case, because as a statutory auditor, I'm not here to express my opinion on the effectiveness of the internal control. I'm here to give my opinion on the financial statements. Okay? Also, the point that I've just told, that when the auditor is communicating any significant deficiency, it should not, the auditor should also clarify that he has tested the internal control on a sample basis. Out of that, only the deficiencies that were, identified, they have been communicated. So he'll see the language that is mentioned. The matters being reported are limited to those deficiencies that the auditor has identified during the audit, and that the auditor has concluded are of sufficient importance to merit being reported to those charged with governance. So whatever testing he has done, out of that only whatever significant deficiencies has come to him, he has given that. His responsibility is not to express an opinion on the effectiveness of internal control, but to give his opinion on the financial statement. He'll give a description of deficiency, the explanation of potential effect, sufficient information so as to enable those charged with governance and management to understand the context of communication. This can form, you can get a very good question here. So you may get a question that you are the statutory auditor of so and so company, and you find that there is a significant deficiency. Let's say there is a deficiency with respect to one of the internal control pertaining to the traveling expense of the company. The auditor considers, as per auditor's professional judgment, it is a significant deficiency. Now, maybe for 5 mark, you are asked that what are the responsibilities of the auditor with respect to communication of such a significant deficiency. So you'll mention that it should be on a timely basis. It should be in writing. Management should also be, informed unless inappropriate, right? Apart from this, it should include a description of deficiency, explanation of potential effects, sufficient information so as to enable them to understand the context. And last but not the least, that the auditor shall explain that he is giving the opinion on the financial statement, not on the operating effectiveness of the internal control. And that the matters are being, limited to the deficiencies that he has identified. And that the auditor has concluded are of sufficient importance. That first of all, he'll say that these are the matters that I have identified. Secondly, he'll say that according to my professional judgment, these are the matters which should be brought to your kind consideration. Is it clear? Is essay 265 clear? Very simple essay, very small. And if you just look at the question that is asked in September 25, such a direct question. But again, why students are not able to get marks? Because they have a tendency to leave, a full topic. They are like, I'll just have an understanding of what 265 is all about, and I'll not, prepare as such, or I'll not, maybe prepare the keywords or anything like that. And the question that is asked is definition of deficiency in internal control and significant deficiency. So there, when you are asked about any definition, how can you just write a general words there or general understanding? This is a professional exam, right? So understanding, and also understanding how to prepare for this exam, understanding the concept plus understanding how to prepare this chapter for exam, as I always say, is very, very important. So I'll just brief this essay 265. In fact, we can do one thing. I'll take you through the saransh for this. So Anil is saying, what if the deficiency is rectified on timely basis? So that is why Anil and other student, that is why we are saying that it is the responsibility of the auditor to communicate this on a timely basis. Everywhere we are saying. So let me just show it to you. Everywhere we are referring to this, that timely basis it should be communicated. So let's say if corrective action is taken, then that is absolutely fine. But yes, if corrective action is not taken, then again, significant deficiency. And let's say then auditor is going to consider it impact on the audit as a whole. Then last but not the least, let's say, or according to auditor, it is of, it is having an impact on the audit, financial audit of the financial statement. It is having a pervasive effect on the financial statement. Management is not, let's say, taking any corrective action. Then last but not the least, what is available to the auditor? His audit opinion. Okay, is it clear, Anil? So let me just open that saransh for you. Just give me a minute. So I'll share also, because then you'll be able to know where is saransh available. So this is the BOS knowledge portal. Then your Saransh, last mile referencer, intermediate, your auditing and ethics subject. It is going to take a while. Meanwhile, I'll just have a look at your queries. So essay 265, just a So let it get open. Meanwhile, you do one thing. Just have a look at this test your understanding, which is given on page number. Page number is 7.50. Quickly test your understanding. So it says that on reviewing the internal control over inventories, as part of statutory audit of a company, the auditor finds that physical verification is not been conducted at regular intervals as stipulated by the management. So physical verification of inventory is but what nothing but one of the internal controls that is implemented by the management, and auditor finds that it is not been working, it is not been conducted at regular intervals as is stipulated, is as is decided by the management. The auditor finds it to be significant deficiencies in internal control over deficiencies. He points it out to the management in one liner as under physical verification of inventory is not been conducted at regular intervals as stipulated by management. Is above communication by management proper? Ignore the statutory reporting requirements. So here, when we say ignore the statutory reporting requirements, so basically whatever, let's say, requirement is there, let's say under CARO, so we are saying not to consider that. The question that has been asked is, as per essay 265, whether this communication by the auditor is proper or not. Send me your replies. Tell me, is it proper, yes or no? Let me just have a look at the answers. Anil, see, misstatement can be due to fraud or it can be due to error. Fraud is always intentional, error is unintentional. How does it matter? If it is material, it is going to have an impact on the financial statement as a whole. Yes, if it is intentional, the severity, the intensity, or let's say the in-depth checking that may be required is more. Anil, is it clear? So I have got many answers whereby you are saying it is not proper, it is not proper as potential effects are not mentioned. Then it is proper because the physical verification must be done by management in an internal basis. No, is required to explain the potential. So see, done by the management, that is correct. Okay? But the question is saying that the auditor see, it says that the physical verification is not to be conducted on regular interval. This is a very significant deficiency, right? And it is mentioned here also, the auditor finds it to be significant deficiency. So here it is not been asked whether auditor, so one of the students saying that since it is the management who is responsible for conducting the physical inventory count, this is proper. No, the question is not saying whether physical inventory count is to be done by management or the auditor. The question clearly says that it is to be done by the management. It is not, auditor finds that it is not been done as was decided and it is a significant deficiency. Now the question is about whether the communication is proper or not. So we have seen that the communication needs to give the auditor needs, the communication should be in writing, plus it should have what, a description and the explanation of potential effects, sufficient information which will enable those charged with governance and management to understand the context in the communication, which is not the case because here the auditor has just mentioned these lines. One liner, it says that he has given a one liner. Physical verification of inventories is not being conducted at interval or regular interval as is stipulated by management. So let us just have a look at the answer that is given in a module. So this is test your understanding 6. We are on page number 7.59 of your module. So it says that while pointing out significant deficiencies in internal control, the auditor has not only to communicate the significant deficiency giving the description, but also to explain the potential effect and sufficient information so as to enable the management and those charged with governance to understand the context of communication. Therefore, the above communication is not proper. Not only significant deficiency has to be communicated, it should be explained to management the potential effects of not carrying out physical inventory, verification of inventories at regular intervals. It should explain that such a significant deficiency can lead to misstatement of inventories impacting profits. Highlighting importance of such a control, it should be stated that responsibility be fixed for concerned persons for adhering to such important control. So basically, why a particular thing is being considered as significant, that needs to be said. What can be the potential? Potential is likely effect that if this deficiency has been continued, that is to be given. Is it clear, everyone? Is it clear, everyone? Let me just have a look. Yes, this is now being open. So we were discussing SC 265. Just a minute. Completion and review. SC 265. Just have a look. A beautiful presentation of entire SC 265 in one page. So let us have a look. What is the name? Communicating deficiencies in internal control to those charged with governance and management. The scope and objective says it deals with auditors' responsibility to communicate appropriately to those charged with governance and management deficiencies in internal control that the auditor has identified in the audit of a financial statement. The objective is to communicate appropriately to those charged with governance and management deficiencies in internal control that he has, identified, and that in the auditor's professional judgment are of sufficient importance to merit their respective attentions. What is meant by deficiency and significant deficiency? This exists when a control is designed, implemented, or operated in such a way that it is unable to P or D and C, prevent or detect and correct material misstatement and the financial statement on a timely basis. A control necessary to prevent or detect and correct misstatement in the financial statement on a timely basis is missing. And what is meant by significant deficiency? A deficiency or combination of deficiencies in internal control that in auditor's professional judgment is of sufficient importance to merit the attention of those charged with governance. So what are the requirements of those charged with of the of this essay? The auditor shall determine whether he has identified one or more deficiencies in the internal control. If yes, the auditor shall determine whether individually or in combination they constitute significant deficiency. The auditor shall communicate in writing significant deficiencies identified to those charged with governance on timely basis. The auditor shall also communicate to management at appropriate level of responsibility in writing about significant deficiencies and other deficiencies. And the written communication shall include a description of deficiencies, explanation of potential effect, sufficient information to enable those charged with governance management to understand the context of the communication. So beautifully summarized. But again, just, you cannot just leave the chapter reading from the module, and you cannot just prepare it for your exams from this directly. Reading from your module once, twice will help you in understanding, in absorbing the entire concept. And using this saransh is going to help you prepare with keywords that should come in your examination sheets. ठीक है? So directly you cannot jump here. If you want to have a look as to what a particular essay is all about, that is fine. But a detailed understanding is required. Why? Because you may get practical situations whereby you are required to apply the essays. So there your deeper understanding is required. Now tell me, are you all clear about essay 265? I have a number of questions that I want to discuss with you. But before that, just tell me whether you are clear of what essay 265 is all about. Tell me, quickly tell me. More yes, I want. Abhi, I have received only few replies. More yes, ma'am, or clear, or thumbs up. I should be able to see. Quickly, I'm waiting for a reply, students. Quickly tell me, is essay 265 clear to everyone? Anyone, any doubt? So Khushi, Vedant, Anjum, Kambir, Nisha, Gayatri, Kashish, I can see thumbs up from them. Others also please reply. Anil, is your doubt clear? So, theek hai. So what we will do is we will take a quick break of 10 minutes here, and after the break, we'll discuss various past year questions. We'll revise this chapter from the Saransh, and I'll just take up all your queries. So a quick break of 10 minutes here, students. Okay, okay. now I'm sharing with you the last year papers and how uh, I have planned it to do is I'll take you through the various questions that have appeared in the last year question papers, and many few have asked me to revise the essays that we have covered. So what I'll do, as and when the question will come, whatever essay will come, I'll take short. Okay. So this is a just a minute. Question number second. Read this. Read this question. You are the Chief Financial Officer, CFO of the Fortune Hotels Limited, a company operating in the hospitality sector with multiple hotels across India. The company has recently completed its accounting and financial reporting for the financial year 24-25, which includes preparation of balance sheet, profit and loss, and notes to accounts. As a key managerial person, you are required to provide a written representation letter to the statutory auditors. Quickly tell me the relevant essay, because I think in the next line, the essay number is given. Tell me the relevant essay. Kashish, Gayatri, correct. Quick answers. Nisha, correct. Okay. Now it says that illustrate the matters you would include in written representation letter in accordance with essay 580 relating to the financial statement. So see, whenever you say that, ma'am, we are not able to, we get scared with the practical situation based question. See, I always tell my students that some situation will be given to you, but ultimately in last, whatever will be asked to you is out of your module, or like 95, 96, or maybe 99% of the time. And that too, if you read the question carefully, very simple question will be there. Never get scared with the practical situation that is given to you. Basically, a foundation is created, and on the top of it, a simple question is asked. So this question simply says that illustrate the matters you would include in written representation. So this is talking about what? The draft written representation letter. And see, let's say whatever we have done in the class, let's say you are able to learn that. Now we have done this draft written representation letter. At this moment, I'll say maybe you are not able to, you might not have learned, though you should have, because I've asked you to prepare the chapter side by side. So see, this is the written representation letter that is given on your page number 7.35 for you. It says that as a key managerial person, you are required to provide a written representation letter to the statutory auditors. Illustrate the matters you would include in written representation letter relating to financial statement, and this is for 5 marks. So you will write that. So it says relating to financial statements. Okay, so first of all, let me just take you through the answer that is given here. So it says C, relating to financial statements. So see, it is not saying ki draft a written representation letter. Then to you would have done it like this, that it should be on letterhead. It should be, it should be, just a minute. Date should be mentioned, format should be given, but it just says to illustrate the matters that too relating to financial statements. So with respect to financial statement, these are the matters that we have fulfilled all our responsibilities as set out in terms of audit engagement. So that audit engagement letter dated so and so for preparation of financial statement such a way that it gives a true and fair view. Significant assumptions used by us are reasonable, related party transactions, subsequent events, right? Uncorrected misstatement. So let us just have a look at the answer that is given in the suggested answers. So see, this is the answer that is, I've just read the question and you start drafting the, written representation letter. And then many of you will say that, ma'am, it is such a lengthy letter and it is coming only for the 5 mark. But please read the question carefully. It is just asking you to illustrate the matters related to financial statement. It is not asking you to give this information provided on financial statement. And this is where students lose mark. They will just read the question. They'll be happy that, yes, we know that it is related to SA 580 and this is asking us. So let me just read it again. They'll just see that it is asking us to, give a draft of the written representation. No, it is not asking you that. First of all, you'll waste your time in drafting the entire written representation letter. And secondly, you will not get marks. It is just asking you to illustrate the matters. And it specifically says relating to financial statements. I am not able to highlight it, but just let me just check. Relating to financial statement, illustrate the matters. It is not even asking you to give a draft. Is it clear, everyone? And honestly, tell me, like, were you able to, were you able to find the correct answer? Absolutely, what is required? Were you able to, see that this is what is required, or were you also having an impression that, yes, draft written representation letter is to be given? Honestly, tell me, once the moment you read the question, anyone who thought that draft letter is to be given? So I can see a number of me here. So students are here. And I'm telling you, this is what actually happens with the student. They start drafting the written representation letter, and which is, which shows that, yes, they have understood like they have understood the entire essay. And again, you will get the marks for what is, asked for in the question. So let me just see whether this is given in detail in your essay 580. Just a minute. So you have seen the answer. So as you were saying to, revise the essays also. So I'll do it from the Saransh, because we have done it quite in detail from a module. So essay 580 is about written representation, and the scope says that this essay deals with the auditor's responsibility to obtain written representation from management and, where appropriate, those charged with governance. The objective is to obtain written representation from the management and those charged with governance that they believe that they have fulfilled their responsibility for preparation of financial statement and completeness of information provided to the auditor, to support other audit evidence relevant to financial statements and specific assertion in the financial statement by means of written representation, and last, to respond appropriately to written representation provided by management, those charged with governance. And what is written representation? It is a written statement by the management provided to the auditor to confirm certain matters or to support other audit evidence. And these do not include financial statements, the assertions therein, and supporting books and records. In fact, there is one question relating to this definition. I'll take up that question next. Then, although written representation provide necessary audit evidence, they do not provide sufficient appropriate audit evidence on their own. This is also, this can, on this blue part, a very good question can be framed. So let's say you are conducting the audit of so and so company, and the auditor has only obtained a written representation, let's say with respect to the inventories that are given on pledge to the bank. A written representation has been taken in this regard. Is it appropriate on the part of the auditor? So there you will mention that it is a necessary audit evidence, but not sufficient appropriate on its own, right? The date of written representation shall be as near as practicable to, but not after the date of auditor's report on the financial statements. Written representation shall be for all financial statements and periods referred to in the auditor's report. Here also you may get a question, you can get a question that you are conducting the audit of so and so, you are on the verge of finalization, completion and review of the audit. You have asked the management to provide you for a written representation with respect to its responsibilities. Management has agreed, but it will provide it to you after you have given the audit report. So it is of no use then. Okay? Then if auditor has a doubt, if written representation are inconsistent with other audit evidence, auditor shall perform audit procedures to resolve the matter. If auditor concludes that the written representation are not reliable, then appropriate action in terms of SA 705. If written representation that is requested is not provided, then auditor shall discuss with the management, reevaluate the integrity of the management, take appropriate action as is required in SA 705. Quickly have a look at this. Meanwhile, I'll just, look at the question that I wanted to discuss with respect to written representation. Just give me a minute. So I think it is in September 25 to be. It is in May 25. To be 5B. May 25. Just give me. This is. See this question. Now this is a. I'm asking. See, Aditi has asked me a question that, ma'am, as you give notes of chapter, should we write answers like that or fully as given in the module? So, student, this is the reason why I don't feel like sharing my notes. See, my notes are given to you only for revising the concepts. I have summarized those notes so as to help you in revising at the time of your exams and for the purpose of remembering the points. How you are required to give your answers is what is given in your module, what is given in your suggested papers. See, I always tell you that many a times it happens that I'm going through my summarized notes and I get confused that what is this short form all about. Let's say AP is mentioned, I also have to apply my mind whether I wanted to write up audit procedures or audit program while I was making the notes. So the purpose of those notes is to summarize it for your to help you in remembering the concepts, to help you in understanding what are the keywords and for the purpose of preparing for the exam. But obviously you are not going to give short forms or you're not going to write the way it is mentioned in the notes. How you are going to give your answers, the way it is given in your suggested papers, the way it is given in your module. So it is really very good that Nidhi or who is the person, let me just have a look at the name, that Aditi, you have raised this question. I'm really happy that you have raised this question, but please don't write short forms as is used in the notes. That is just for helping you in remembering. I have made a number of like short forms whenever I, explain the concept of audit procedures, I ask my students to use ICAI ORR. I for inspection, then C for external confirmation, analytical procedures, I for inquiry, O for observation, reperformance, and recalculation. So you will not write the short forms. ICAI ORR, no one is going to understand. So consider your module as your base. This is what I meant to say. Aditi, is it clear? And others also, is it clear? Now read this question. This is a May 25 question relating to written representation. The management of Sunshine Limited has provided the auditor with the written representation regarding its responsibility for the preparation of financial statements. In addition to this, the auditor may request other written representation about the financial statements. Mention such other representations which may supplement but do not form part of written representation relating to management's responsibility regarding preparation of financial statements. I'm not showing you the answer. And see this, the answer relating to this question is not there in your saransh, because the saransh is what? A summary of the important aspects, or a summary of what a particular topic is all about. And I always ask you to go through the module, to consider your module as the base. Uske upar whatever you want to use to, to summarize, to remember, to revise, that is up to you. But your module is the base. Now tell me from your module the exact, I really want the exact page number. You can take 1 or 2 minutes, read the question again and again. It is a 5-mark question, May 25 exam. Now that we have understood each and every essay of this chapter in detail, and in fact, I have tried to take you through each and every page of your module. I want a correct answer from you with respect to this question. So the question says that mention such other representations which may supplement but do not form part of written representation relating to management's responsibility regarding preparation of financial statement. See, students, if you have my notes, that are going to help you a lot in preparing for your exam. But but I always tell you that reading your module twice or thrice is really important for securing good marks in your audit subject. Only Saransh, only my notes are not going to help you. Okay? Give me the answer, the exact page number. Let me just see if anyone has answered. And I'm so happy that when we are discussing the question, the number of students that are there in this meeting have increased, which is really very good. Because generally the opposite happens, that whenever the question part has been discussed, the students, they feel that the topics have been discussed, now we can leave. But this is really very good that the number of students have increased. So let me just look at the page number. Absolutely correct. Who all have answered? Kashish, Khushi Gupta, Kambir, Vedant. Absolutely correct. Others also please reply, then I'll take you through the module and the correct answer. So it says that, I'll read the question again. Ramachandran, absolutely correct. The management of Sunshine Limited has provided the auditor with the representation regarding its responsibility for the preparation of the financial statements. In addition to this, the auditor may request other written representation about the financial statements. Mention such other financial statement representations which may supplement but do not form part of written representation relating to management's responsibilities regarding preparation of financial statement. So the answer is given here. So again, SA 580 written representation says that in addition to written representation about management's responsibility regarding preparation of financial statements, the auditor may consider it necessary to request other written representation about the financial statements. Nisha, SA 580 is correct, but I want the exact page number from your module. So other representation which may supplement management's responsibility regarding preparation of financial statements are whether selection and application of accounting policies are appropriate. So these as such, see, management responsibility is what for preparation of financial statement for SA 560, SA 550, whatever we have done earlier, right? Now, or in the earlier question. So apart from that, what can be? So the various matters such as following where relevant under the applicable FRF has been recognized, measured, presented and disclosed. That is plans and intentions that may affect the carrying value classification of assets and liabilities. Liabilities, whether these are actual or contingent. Title to or control over assets, the liens, the encumbrances on assets pledged as collaterals, and various aspects of laws, regulations, contractual agreements that may affect the financial statement, including the non-compliance. So now let me just show you where is it given. So if you just have a look at this, so see, and in fact, I would like to I would like to draw your attention to the fact that though it is a practical situation based question, but if you just read the question carefully, see the question, it says that, see, it says that mention other representation which may supplement but do not form part of written representation relating to management's responsibility. And this line is, in addition to written representation about this, the auditor may consider such written representation may supplement but do not form part of written representation relating to management's responsibility. Just a minute, why I am not able to highlight it. Just a minute. So I'm not able to highlight it. Some glitches there, but I hope you are able to see the box. So such written representation may supplement but do not form part of the written representation relating to management's responsibility regarding preparation of financial statement. They may include representations about this. So in fact, though some case study is given, but it is such a direct question. Though a case study is given, but it simply says, mention such other written representation which may supplement but do not form part of your written representation. Are you able to understand how to give the answers? And see, many a time students, what they do, okay, written representation has been asked for, they'll start giving the definition of written representation. They'll start giving maybe the format or maybe something or the other about written representation. You will not get marks. If you want good marks, you want to pass this exam for like with flying colors, give specific answers. If specific questions are being asked for, you will have to give specific answers. So in the definition or deficiencies of internal control or significant deficiency, you cannot just write everything about SA 265. Same way here also, you cannot just write everything about SA 580. That is not asked for. What is asked for? Various other matters for which written representation can be taken apart from the management's responsibility. So that is what you are required to give. Okay. So I hope this is clear. And in May 25, one more question is there. Read this question. So question number 2, part B. Give 5 examples of operating events or conditions that individually or collectively may cast significant doubt on entity's ability to continue as a going concern. This is a May 25 question paper, question number 2, um, part B, for a 5-mark question. Quickly tell me the relevant page number, which according to you should come, and the relevant essay also. And this is such a easy question, very easy. Essay 570, going concern, correct. Page number, Kashish has mentioned, which is correct. Others also please mention the page number. Gayatri correct, Vedant correct. So almost all of you are correct. So let us just see. It simply says that operating event. So again, read the question carefully. It is not asking you about the financial events. It is just asking you about operating events. It is not just asking you what is going concern or anything like that. Operating in events that individually or collectively may cast significant doubt on the entity's ability to continue as the going concern. So, see, as per SA 570, conditions that individually or collectively make a significant doubt on entity's ability to continue as a going concern. Management's intention to liquidate the entity or to cease operations. Loss of key management without personnel. Loss of major market key customer franchisee, license or principal suppliers, labor difficulties, shortages of important supplies, emergence of a highly successful competitor. Such a straightforward question, but if you do not give a straightforward answer, you'll not get straightforward marks. As simple as that. Okay? So let me just take you through the module also. It is on page number 7.17. And it is not talking about financial events. It is just asking you to give answer from here. And why I'm not able to mark? Chalo. So it is asking you to give, answer from here. Operating and operating events or conditions. Okay, is it clear? Now let us go to SA 570 from here. We haven't done SA 570 from this. So let us just do it. So the objective, the scope is, this essay deals with the auditor's responsibility on the audit of financial statement relating to going concern, implications for the auditor's report. And the objective, there are three objectives. What? So a straightforward question can come with respect to objectives of auditor in terms of SA 570. To obtain sufficient appropriate audit evidence regarding and conclude on the appropriateness of management's use of going concern basis of accounting in the preparation of financial statement, to conclude whether a material uncertainty exists relating to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern, and to report in accordance with the essay. Now, what are the risk assessment procedures with respect to going concern? So, auditor will determine whether management has already performed the preliminary assessment of entity's ability to continue as a going concern. If it has been done, auditor shall discuss with the management the assessment. He'll determine whether management has identified events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. If so, what are the management plan to address them? If management has not done that assessment, auditor shall discuss the management, the basis for intended use of going concern. That management, if you haven't done the assessment, how come you are using going concern? Inquire management whether events or conditions exist that make a significant doubt on the entity's ability to continue as a going concern. Now, financial events are given like net liability or net current liability position, indication of withdrawal of financial support by creditors, adverse key financial ratios, arrears or discontinuance of dividends, inability to pay creditors on due dates, inability to comply with the terms of loan and agreement. And here operating conditions are given. Okay, and other are also given, like non-compliance with capital or statutory regulatory requirement, changes in law, regulation, government policy expected to adversely affect the entity, and uninsured or underinsured catastrophes when they occur. Catastrophes are what? Disasters. Okay. Now, if such events are identified, auditor is going to analyze and discuss the cash flow, profit, and other relevant forecasts with the management. Read the terms of debentures and loan agreements and determine whether any of these have been breached. Evaluate the entity's plan to deal with unfulfilled customer orders. Obtain and review the reports of regulatory actions, analyzing and discussing the entity's latest available interim financial statement, reading the minutes of the meetings of shareholders, those charged with governance and relevant committees for reference to financing difficulties, confirming the existence, terms, and adequacies of borrowing facilities, determining the adequacy of support for any planned disposal of assets. If auditor shall evaluate the sufficient appropriate audit evidence, whether this has been obtained, and conclude on the appropriateness of management's use of going concern. Based on the audit evidence obtained, auditor shall conclude whether in auditor's judgment or material uncertainty exists that may cast significant doubt on the entity's ability to continue as a going concern. See this line, whether there is a significant doubt as to the entity's ability to continue as a going concern. This I have, while reading this, I have, read this line, I think 5-6 times. Now you all are at this stage that you all now know where to devote your energy, where to, from where to pick up the keywords. These are the lines that if you write in the exam, that are going to give you good marks, that are going to show that yes, you have understood the concepts very clearly. You have understood the concepts and the keywords very clearly. So devote your energy towards these words, your time. Okay. So adequacy of disclosures. So basically, in case the material uncertainty exists, so in that case, that the same should be adequately disclosed in the financial statements, and adequacy of disclosures when there is no material uncertainty. Auditor shall evaluate whether, in view of the requirement of applicable FRF, the financial statement provide adequate disclosure about these events or conditions. And implications for the auditor report. First of all, if it is adverse, the going concern basis that the management has, applied for preparation of financial statement is adverse, is inappropriate, straightforward adverse opinion. If going concern basis is appropriate but a material uncertainty exists. So first of all, unmodified opinion, but also material uncertainty should be made in the financial statements. Shall express an unmodified opinion, but along with that, material uncertainty relating to going concern, auditor will give this as a paragraph in order to draw the user's attention, right? But let's say if the adequate disclosure is not given, then auditor is going to give a qualified or adverse opinion, right? And in the basis of opinion paragraph, adverse or qualified, is going to mention that what is the reason. And if management is unwilling to extend its assessment, again, qualified or disclaimer of opinion in the auditor's report. Now, what is qualified, disclaimer, or adverse? I've given you a brief idea, but in detail, you will be studying this in your next chapter. Is it clear how beautifully essay 570 is summarized? And see, I'm not saying that use this for understanding, use this for revising. Once you have understood, and in fact, my notes also, use them for revising, for remembering the keywords, not for understanding. For understanding, you need, full-fledged paragraphs whereby you can read and you can make out what is been, what message has been conveyed. Okay. So everyone clear with this? Now let us discuss the next question. Just a minute. So we have discussed May 25, fourth questions. This is Jan 5A. So read this question. Question number 5. A part, again a 5-mark question, and this is your January 26. You are the auditor of LMN Limited. The company's financial statement for the year ended 31st March 2025, along with your audit report, were issued on 30th June 2025. So the financial statements have been issued. 2 months after the issue of auditor's report, you become aware of a fact that existed as on the audit report but was not known to you at that time. Had this fact been known to you earlier, it would have required a modification of your opinion. So see how clearly everything is mentioned. Give the overview of auditor's responsibility in the given fact and situation in line with SA 560 subsequent events. See the SA number, the name is also given. It is a straightforward question. The story that has been discussed, it basically gives you a very simple story that this has happened. Now tell us what is your name. So what I mean to say is what is been asked for in the question is very clearly mentioned. It says that the financial statements have been issued. After 2 months, you become aware of the fact. Had it been known to to you earlier, you would have modified the opinion. Auditor's responsibility for that. So, if you remember when we discussed SA 560, I told you that subsequent events, for the purpose of understanding, I made a diagram that A, B, and C, 3 periods are there. This question is about which period? Tell me, quickly tell me. Quickly tell me. Kashish, correct. Others also please reply. Gayatri, Khushi, absolutely correct. Vedant, absolutely correct. This is about the C period. So let me just take you through my notes once. So essay 560 was the first essay that we did in this chapter. And C, the facts which become known to the auditor after the financial statements have been issued. So relating to period C, what are the responsibilities of the auditor? So, see, after this has been issued, these are the responsibilities. Let me just take you through the answer that is given there. In fact, you tell me. So many of you have started giving the page number. Let me just see whether you are on the right track or not. Yes. Who is this? Ramachandran, correct. Others also please reply. So first of all, we'll have a look at the answer and then we'll look at SA 560 from your Saransh. So see, it says that SA 560, the auditor. So see, it says that what are the responsibilities for this? So first of all, SA 560, what does it say? That the auditor has no obligation to perform any audit procedure regarding such financial statements after the financial statement have been issued. However, when after the financial statement have been issued, a fact becomes known to the auditor that had it been known to the auditor at the time of auditor's report may have caused the auditor to amend the auditor's report. He'll discuss the matter with the management and where appropriate those charged with governance. He'll determine whether the financial statement need amendment and if so, inquire how management intends to address the matter. If management amends the financial statement, the auditor shall carry out procedure necessary in circumstances on the amendment. Review the steps taken by the management to ensure that anyone in receipt of previously issued financial statement together with the auditor's report thereon is informed of the situation. Extend the audit procedures already, refer to the date of the new auditor's report and provide a new auditor's report on amended financial statement. Include in the new auditor's report the EOM paragraph referring to the note of the financial statement that more extensively discusses the reasons for amendment. And if management does not take the necessary action, then and does not amend the financial statement, then where auditor believes that the same needs to be amended, the auditor will notify management, or auditor will seek prevent the future reliance on auditor's report. If despite such notification, management or those charged with governance do not take necessary steps, the auditor shall take appropriate action to seek prevent reliance on auditor's report. Let me just take you through the module also for this. This is a straightforward question. So this is what is given. And I think you can refer to this overview also. So it is given on page number 7.9 of your module. See, after the financial statements have been issued, there the auditor has no obligation. So mentioning this is also important. Are you able to understand how direct the questions are asked? And though you may call them practical based, situation based question. See, why one of the student is asking me, ma'am, how will we segregate the topic that these are important for MCQ or these are important for descriptive? First of all, in first place, why do you want to segregate that for that reason? You need to understand the concept. Once your concepts are clear, you are ready for your MCQs. And then I'm not saying you know that cram this particular topic or something like that. I always tell you that first of all, try to understand the topic. Once your conceptual clarity is there, your MCQs are done. Then for a descriptive type question, just concentrate on certain keywords. And if you have understood the chapter in the keywords that are mentioned in your module, then in that case, your energy, your time that will be required in, learning the keywords will be very less. Because see, when you are understanding here, if I just tell me that if the auditor becomes aware about any situation, no, I'm not using the word situation. I'm saying facts. When I'm understanding also, I'm using the words that I know are the keywords. Okay? So again, I'm telling you, if you have the conceptual clarity, if you have read your module twice at least, you all are prepared for your MCQs, I assure you. But again, hard work is required. You cannot just, read the module twice, thrice, or four times just for formality's sake, that you are reading, but your mind is not working. This cannot give you good marks. Give it a proper reading with full concentration of your eyes, of your mind, keeping your phones aside. The distractions that you have of social media, that should be kept aside. Then only whatever you are reading will get into your minds. Okay? Is it clear? Okay? So now let me just take you through the Saransh also for this essay 560. Essay 560. So subsequent events occurring between the date of financial statements and date of the auditor's report, facts which become known to the auditor after the date of auditor's report but before the date the financial statements are issued, and facts which become known to the auditor after the financial statements have been issued. So see students, when I am understanding this topic, I have told myself that subsequent events may A, B, C, three periods are there. In period number A, we call them events because something has happened for which auditor needs to, perform the audit procedures. For the events, for, the things that have happened in period number B and C, we call them as facts because here the auditor is under no obligation to, perform any audit procedures separately. But if the facts become known to him, so I gave you example that he, let's say some news is there in the newspaper he have read. So are you able to understand? While understanding, I have, registered it in my mind that for period A, I'm saying events, for B and C, I'm saying facts. So now I do not want to, devote my time or energy towards learning this definition because I'm aware that events between Date of financial statement, date of audit report. Facts that become known to the auditor after the date of audit report, but before the financial statements are issued, and facts that become known to the auditor after the financial statements are issued. As simple as that. While I was, discussing this definition, and in fact, even if it is not in front of my eyes, how I'm going to recall it, I'll just recall the diagram that I made, A, B, and C. And then I'll just slowly try to see that, okay, for A, there were events from date of financial statement to the date of auditor's report. Then I'll try to recall for B, facts that become known to the auditor after the date of audit report, but before the financial statement issued. And third is facts that become known to the auditor after the date of financial statements are issued. Preparing this chapter this subject is really very, very easy, but then it depends upon how you are preparing it. Okay. Scope SFI-60 deals with the auditor's responsibility relating to subsequent events in an audit of financial statements. And the objectives are to obtain sufficient appropriate audit evidence about whether subsequent events that require adjustment of or disclosure in the financial statement are appropriately reflected in those financial statements. Secondly, respond appropriately. So here it is not saying obtain sufficient appropriate audit evidence. So if the basics are clear, I am not required to devote extra energy towards learning this. These words will automatically come. See, if my basics are clear, while I was understanding, I understood that why this particular word has been used. And then I have gone through my module twice. I assure you, no separate energy, no separate time in learning. Why? Because I've understood each and every word. Okay? So respond appropriately to facts that become known to the auditor after the date of auditor's report that, had they been known to the auditor at that date, may have caused the auditor to amend the auditor's report. So what are the auditor's procedures for events relating to the time period from the date of financial statement to the date of auditor's report? Obtaining an understanding of any procedure management has established to ensure that subsequent events are identified. Inquiring of management and where appropriate those charged with governance as to whether any subsequent event have occurred which might affect the financial statement. Reading the minutes of meetings of the entities, owners, management, and those charged with governance that have been held after the date of financial statements, and inquiring about matters discussed as such meetings for which minutes are not yet available, and reading the entity's latest subsequent interim financial statement. Facts which become known to the auditor after the date of the financial statements. So it discussed the matter with management and those charged with governance, determine whether the financial statement need amendment. If so, inquire how management intends to address the matter in the financial statement. If management amends the financial statement, the auditor shall extend the audit procedures, refer to the date of the new auditor's report, and provide a new auditor's report on the amended financial statement. If management does not amend, if auditor's report has not yet been provided, the auditor shall modify the opinion. If auditor's report has already been provided to the entity, the auditor shall notify management, and unless all of those charged with governance are involved in managing the entity, those charged with governance also, not to issue the financial statement to third parties before the necessary amendments have been made. Facts which become known after the financial statement has been issued, the auditor shall discuss the matter with management, those charged with governance, determine whether financial statement need amendment, and if so, inquire how management intends to address the matter in the financial statement. If management amends, then carry out the procedures necessary in the circumstances on the amendment, extend the audit reports to the date of new auditor's report, review the steps taken by the management. Is it clear? See, students, I am really enjoying teaching you, discussing with you the chapters, the questions. Are you all also enjoying? Are you able to, understand? Like I always tell my students that my purpose of, teaching you, or my purpose of taking these classes is not only to make you understand the concept, but I really want you all to understand that, only understanding won't give you good marks. Your way of writing the paper is going to decide, because see, the paper checker is going to give you marks on what you are going to write in your paper. And in this paper specifically, your auditing and ethics subject, students tell us that, ma'am, we have understood the concept, we have learned the concept, but when we come to, when we start writing the paper, we fall short of word. We don't know from where to start. And in fact, there are students who have who have written good answers according to them. Yes, we have done 100% of the paper, and the marks then that they get is 30, 31, 32. Why? Because they give general answers. If some specific question of SF5 it is asked for, they will tell everything about SF580, but not that specific question. So my request to you all again that preparing auditing and ethics subject, getting or passing this exam with flying colors is not difficult. You just you just need to plan. Okay? So planning may again I like to repeat, because today is my last session with you for this batch. This is the last chapter that I am taking. So here I would like to stop and tell you that, students, if you just listen to the discussions that we have during the sessions, maybe you can watch the recorded lectures and then go through your module. Twice at least you should go, right? And with concentration, not for formality's sake. And then if you just, try to prepare, let's say, one topic for your exam, any one question, let's say responsibilities of the auditor in terms of SA 570. Just try to write that and then check it with your module or the suggested answer. Cramming is not required. But yes, you can, you cannot just give general answers. There are 3 specific objectives. Now, when you are trying to learn those objectives, you should be, it should be clear. The first is related that whether management's use of going concern is appropriate or not. Then significant whether events conditions are there that may cast significant doubt on the entity's ability to continue as a going concern, and then to report in accordance with SA. So if you're clear that, okay, these are the 3 objectives. Now, if you write general answers, how can you expect good marks? Okay? So I'm telling you again, be smart learners, plan your preparation of this subject. Is it clear? So I was telling you that, yes, I am enjoying teaching you. I am really, liking the way you are making this session, in fact, the sessions that have taken place interactive. So are you guys able to take benefit of these sessions? Are you guys able to understand the concept and also the concept of how to prepare this exam? So now let me just discuss one more question with you. So we have discussed January 26 paper. Now this is September 25. I think I have discussed this question. This we have already discussed. So let me just take you through your SA 450. Just a minute. So SA 450 is about evaluation of misstatements identified during the audit. So SA 450 deals with auditor's responsibility to evaluate the effect of identified misstatement on the audit and of uncorrected misstatement, if any, on the financial statements. The objective of the auditor is to, consider the effect of identified misstatement on audit and effect of uncorrected misstatement, if any, on the financial statement. Consideration of identified misstatement as the auditor progresses. The auditor shall determine whether the overall audit strategy and audit plan needs to be revised if the nature of identified misstatement and the circumstances of their occurrence indicate that other misstatements may exist that, when aggregated with misstatements accumulated during the audit, could be material, or aggregate of misstatements accumulated during the audit approaches materiality as determined in essay 320. Communication and correction of misstatement. Auditor shall communicate all misstatements with the management unless prohibited by law and regulation. The auditor shall request management to correct these misstatements. If management refuses to correct, then the auditor shall obtain an understanding of management's reason for not making the corrections. Evaluating the effect of uncorrected misstatement. Auditor shall determine whether uncorrected misstatements are material. In making this determination, the auditor shall consider the size and nature of misstatement both in relation to particular classes of transaction, account balances or disclosure, and the financial statement as a whole. Effect of uncorrected misstatement relating to prior period on the relevant classes of transactions, account balances and disclosures, and the financial statement as a whole. And communication with those charged with governance. Auditor shall communicate with those charged with governance regarding the uncorrected misstatement and the effect that may have on the opinion in the auditor's report unless prohibited by law and regulation. The auditor's communication shall identify material uncorrected misstatement individually and request to correct them. Written representation from management regarding the uncorrected misstatement. So here auditor will obtain what? Written representation from the management that if any misstatement is uncorrected, so the effect of same is immaterial. So it says what? Auditor shall request a written representation from management and where appropriate those charged with governance, whether they believe the effects of uncorrected misstatement are immaterial to the financial statement as a whole. A summary of such items shall be included in or attached to the written representation. Documentation regarding misstatement identified during audit. Audit documentation shall include amount below which misstatement should be regarded as clearly trivial. Trivial is what? Small. All misstatements accumulated during the audit and whether they have been corrected, and auditor's conclusion as to whether uncorrected misstatements are material and the basis of for that conclusion. Is it clear? So we are left with only one essay to be done from your module, which is essay to which is to be done from your Saransh, which is essay 260. I'll do that, but before that, tell me, are you all clear? If you have any query, you can ask me. So, thank you, students, for your appreciating messages. Thank you so much. So, essay 260 is about what? Communication with those charged with governance, right? Don't get confused between 260 and 265. 260 essay is about communication with those charged with governance. And essay 265 is specifically about communicating deficiencies in internal control to those charged with governance in management. And students, I always tell my students that it is always better not to write wrong essay number or name. If you are very much clear about it, write that. Otherwise, write relevant essay. Okay? So I'm not saying that write relevant essay everywhere. Try to learn it. Try to learn the name. But if you're not, sure, better to avoid writing wrong essay name and number. So scope of the essay and objective, it deals with the auditor's responsibility to communicate with those charged with governance in an audit of financial statement. The objective, so these objectives that are given in your essay, they can form a direct 4 mark question. Direct question can come. To communicate clearly with those charged with governance, the responsibilities of auditor, overview of planned scope of timing, obtain from those charged with governance information relevant to audit, provide them with timely observations that are significant and relevant to their responsibility to oversee the financial reporting process and to promote effective two-way communication. So if you remember, students, I've told you as to how to, learn these objectives. So the first say, the auditor needs to communicate something. What? The overall responsibility is the scope and audit, right? Then the second says to obtain something from those charged with governance. So all relevant information, right? During the course of audit, so in fact, from A and B, just try to derive the D point, that is to promote effective effective two-way communication. And then to provide those charged with governance with timely observation that would help them to oversee in their overseeing responsibility. Okay. Now, who are those charged with governance? Who are management? Very important concept for your understanding of the entire auditing and ethics subject. A person or organization with responsibility for overseeing that strategic direction of the entity and obligations relating to the accountability of entity. This includes overseeing the financial reporting process. And who is management? The person with the executive responsibility for the conduct of the entity's operation. For some entities, management includes some or all of those charged with governance. For example, executive members of a governance board or owner manager. What are the matters to be communicated? Again, really very important, that what are the matters that the auditor needs to communicate in terms of SC 260. First of all, the responsibilities of the auditor in relation to financial audit, planned scope, timing, and significant risk identified during audit, auditor's view about significant qualitative aspects like accounting practices, significant difficulties encountered during audit, written representation the auditor asked from the management, circumstances that may affect the form and content of auditor's report, and last but not the least, any other significant matter arising during the audit relevant to the oversight of financial reporting process. So these matters are somehow from the objective only, if you just see. Okay. In case of listed entities, there is a separate responsibility with respect to auditors, independence, and ethical requirements. So it says that in case of listed entities, the auditor shall communicate with those charged with governance a statement that the engagement team and others in the firm, they have complied with relevant ethical requirements regarding independence and the related safeguards that have been applied to eliminate the identified threats to independence and to reduce them to an acceptable level. And other important points are the auditor shall communicate with those charged with governance what all? The form, timing, expected general content of communication. In writing the significant findings from the audit and regarding auditor's independence, and that should be done in timely basis. The auditor shall evaluate the adequacy of communication process with those charged with governance. If not found adequate, auditor shall evaluate the effect and take appropriate action. And last but not the least, the auditor shall include the matters communicated to those charged with governance, whether orally or in writing in audit documentation. So if you remember, we have done this documentation part that if something has been communicated in writing, a copy of that will be kept. If it has been done orally, then when and to whom the same was communicated, that will be documented, right? So with this, we have completed this chapter from your module and as well as from your saransh. We have discussed a number of past year questions. In case you have any doubt, please let me know. So Kashish is saying that she had an excellent experience. Conceptual clarity was great. So this chapter is, along with the previous chapters, she is crystal clear about all the chapters that we have done, which is really very, good. I feel really very happy to see such messages. And in fact, here when the time has come that this is my last session with you, here again, I would like to remind you to that message that the student who got 62 marks in his auditing exam, and he specifically mentioned when he came to the class, he mentioned it in the chat box that only he has gone through the videos, recorded lectures, and whatever was advised in the recorded lectures, these LVC classes, which are organized by the Board of Studies, only out of that he has prepared and he obtained 62 marks, which is a good score for auditing and ethics paper. Okay? But students, again, whatever is asked, you cannot just do that for formality's sake. Just, with utmost, I can say, sincerity, start preparing this, start reading your module. After this, if you want to read any book, you can do that. But what I would like to tell you is the resources that are available to you, that are being made specifically for your purpose, for your benefit, which are there available on the BOS knowledge portal. These are really very, very useful. I have taken you through the entire Saransh for this chapter, chapter number 7, because I wanted you to also realize that how beautifully the Saransh summarizes the entire auditing and ethics subject and how it can be very useful to you. And I hope that you have found it really very useful. Chapter number 5, 6, 7 is what we have covered, like I have discussed with you. In case you have any doubt, you can always send in your queries. And in last, I would like to wish you all the very best. I really want you all to, pass this exam, and in fact, your CA intermediate with flying colors. But yes, students, there is no substitute for hard work. Hard work is required. It is a professional exam. It is, it requires you to work very hard and in a smart way. Okay? So all the very best. In case you have any query, you can forward it to you. It will definitely reach me through the mail IDs or like whatever to whomsoever you are going to convey your queries, it will reach me, right? So try to follow the strategies that we have discussed, and I'm sure that you all will get very good marks in your auditing and ethics subject. So all the very best to all of you. Thank you, students. Bye bye. Yes, session is over. Over. Okay, thank you. Bye.